What is going on, everyone? Today we have to cover Bitcoin because, as you guys can see, Bitcoin prices are not looking like they're dumping. They're looking like they are pumping right now. So we're going to talk about this. Remember, I'm not a financial advisor. None of this is financial advice, but let's get straight into it. As you can see, though, we are up 4% in the last 24 hours, 6.7% in the last 7 days, 10% in the last 14 days, and 12% inside of the last month. So we have been going up actually a decent amount inside of Bitcoin here. And, a lot of money has flowed into the market inside of the past 24 hours. If you look here, like literally flat on 1.5 trillion in market cap on Bitcoin. And then now if you look at it, 1583 trillion. So what that's pretty much meaning is we literally had about $83 billion injected into Bitcoin within the last 24 hours, which is actually pretty significant, right? But yeah, we are pumping. We've literally broken out of our bear flag here. And for you guys that don't know, which you guys probably should know by now, bear flags are bearish patterns. So this was expected to be a drawdown from here, but it actually continued to rise. We got rejected multiple times during this bear flag, right? Because if you look right here, we got rejected right there. If you look right here, we got rejected again. And you look here again, and then we got rejected again. And this time we kind of broke past it. Now the day isn't closed yet, so this 1 day candlestick is not pretty much closing above our bear flag. But if you come over here and look at the 4-hour chart, you can see that 4-hour candlestick has actually already closed above our bear flag. So that's going to be a problem. It's going to be an issue. We got to see what is going to happen from there. And that's kind of what I'm here to talk about today. So right now, looking at the percent R trend exhaustion, I was mentioning before how this white line, the short-term trend, when it pulls back, is going to pull the price back because the blue line, the long-term trend, did not follow it. But look, the long-term trend here is following the short-term trend upwards, and they're both increasing simultaneously. So what is the likelihood for us to break past this Fibonacci resistance, right, at 80K? So there's always that possibility, but remember, we had the support here at 85K. So somewhere around there, we have support at 85K, 83K, and also 80K. And that's kind of what we're looking at right now. We're kind of looking at the 79K resistance at our Fibonacci resistance. So the likelihood, I think, is 50-50 at this point, right? It depends what people are doing in the market. Everybody is getting super greedy in the market, actually. The Crypto Fear Greed Index has just now flipped to greed. So this is usually a signal when there's about to be a large influx of people buying. And not only are we seeing that, we're also seeing stuff like BlackRock owning so much Bitcoin, but we also seen Michael Saylor purchased a lot of Bitcoin and flipped BlackRock and now owns more Bitcoin than BlackRock. So that's what this particular article right here is about. So pretty much what it says here is Strategy's last Bitcoin buy saw the company top BlackRock's IBT Bitcoin fund, which holds almost 803,000 Bitcoins on behalf of investors. So we pretty much seen them flip them, and now they own more than BlackRock. So that's a lot of money, and yeah, that alone, that headline alone, pushes a huge narrative. So I think this is another attempt at them to kind of recover Bitcoin. And I think when I say them, when I'm pretty much saying institutional investors, let's be honest, they have literally been buying on every single dip. They're not letting this thing go down. And if it keeps going down, they're going to keep buying it up. So they're really propping Bitcoin up as we're going down. They're buying more and more and more and more at cheaper levels. So they don't really care if it takes off now. They don't really care if it dumps. All they care about is that they get some at 78K. So then when it continues to pull back, or let's say it takes off and then pulls back later on, they can get more at 60K. So, they'd rather trick people and get more people to come in to the market to get dumped on, pretty much to get used as exit liquidity. So yeah, I think this is a form of market manipulation. It's kind of how they do it, and there's a bunch of articles about it. And this is the first article. This article is kind of similar. But yeah, it's just talking about the inflow of money going into MicroStrategy the inflow of new Bitcoin that they have going into their fund. So, it's actually a pretty big deal. So yeah, that's pretty much what they're doing right now. Now, beyond that though, we do have a few people talking about some things here on Twitter. We have Ted here talking about how we just broke the 78K level, talking about how he thinks we're going to get up to like a 83 to 85K level. So, well, that's really like 80 to 85K level. So yeah, that is a zone up there that you could watch out for. And then also we see some people talking about the bulls celebrating. And yeah, people are getting super bullish right now. I see it all over. People are literally flipping bullish just like that. And you can't do that. You can't do that. For me personally, I don't have a bullish confirmation until we're far past all this, right? I don't have any bullish confirmation until I see us get back into the 100Ks. If we're not getting back into the 100Ks above this head and shoulders right here, then, we have nothing to discuss. So we need to get back above this Fibonacci. And really the Fibonacci is at like 98K, but I'm really not going to be bullish until I see like 100K. If we're not at 100K, I'm not going bullish. But yeah, that's just how I see it right now. But a lot of people literally just like that, just flipping bullish on everybody. It just, so you got to be careful. You got to be careful. But let's look at some of the smaller charts. This is the 4-hour chart for Bitcoin. And this is the %R trend exhaustion on the 4-hour chart. Now, this is interesting because we're overbought here on the 4-hour. So first, let me show you the daily chart. So this is the daily chart on the %R trend exhaustion for Bitcoin, right? And on this daily chart, we're pretty much seeing that we're coming up here on the long-term trend, which is the blue line down here. And then the white line up here is the short-term trend. Both of them are simultaneously coming up, but not yet overbought, because this region right here is an overbought region. This is pretty much where overbuying is at. And then down here in this box on the %R trend exhaustion, this is where overselling is at. So this is usually where you have those reversals upwards. This is usually where you have reversals downwards. Now, if the long-term trend is not following the short-term trend upwards, then we're going to have that reversal downwards immediately. But if it does, it's going to stay up there for an extended period of time, similar to this range over here and this range over here. But whenever it's not like that, then it's not extended, just like how it is back here pretty much. So that's why you got to be extremely careful here. We gotta make sure we know what's about to happen, whether or not this long-term trend continues to follow upwards. That's the main thing that we need to figure out, because until you figure that out, anything can happen. It could literally dump in a matter of seconds. And that's why when I look at the 4-hour chart in the %R trend exhaustion here, and I see that it is overbought, at least on the 4-hour, it kind of shows me, well, hey, what if we get that reversal signal right here and then we start pulling back? And the thing with that is, well, then that means that we just hit a resistance area, right? Which we literally just did on the Fibonacci, 79.5K. So my theory here is that we either do a dump here, right? And then we just come back up, like we do a dump down here to like 76K, and then we come back up and start pumping again. Or we do something else. And then the other one, maybe it starts to just go up from here, or maybe it literally crashes all the way down from here. And what I mean by that is it crashes and then there's like an extended sell-off period. And then there's also the extended buying period. If it becomes an extended buying period, we're going to see it being overbought for a longer period of time. And what that would pretty much look like is, boom, us going all the way up to like 85K, 88K, something like that. Now, more likely than not, what I think is going to happen is going to be that pullback right here. I think we're going to get a nice, nasty pullback. And I think this is going to end up dumping. And then from there, I think it's going to be almost like an extended sell-off. And then we're going to start seeing more buying pressure coming in, followed by another sell-off, because the long-term trend probably won't follow it again. It'll stay down here while the short-term trend goes off. So pretty much just another drop in the bucket. So that's kind of what it's looking like to me. And look, it might not happen this way, or it might happen this way. We'll have to see. But the only thing I can say is I'm not a financial advisor. None of this is financial advice. We're just kind of breaking it down here. And this is a major resistance. So keep that in mind. Definitely be careful right there. Now, this is the weekly chart. So if you want to look at longer term charts, this chart might be like, okay, maybe they're onto something. Maybe it is about to take off, right? That's what the weekly chart could be telling us. Now, look, we haven't closed this week, right? We haven't closed this next week right here. We got to see where this candlestick closes on the weekly, because it could break out very briefly, right? And break out on the 4-hour and on the daily chart. But on the weekly chart, let's say it doesn't even close in 80K. Let's say when this candle closes, that it closes back in the 70K range. Well, then it's just going to look like a long tail wick going up, right? So that really wouldn't be too much of a problem. It would be, again, a bull trap. And it's so easy for the bulls to get trapped inside of this market because they can just keep manipulating it into their favor. And this is literally what they're doing. Like, you're thinking, oh, okay, it's going to take off. It's going to take off just like you thought here. And boom, it don't. Now you're thinking, oh, it's going to take off. It's going to take off. It might do the same thing now, or they might actually allow it to take off and then they'll dump it later on once more people buy in. So really, they just need more people to buy in for exit liquidity. And my thing is, I don't care if it's 78K. I don't care if it goes up to 85K. I care where it's going to go inside of the next couple months, the next 3 months, or the rest of the bear market. That's really what I care about. I care about where is the bottom going to be for this bear market. And honestly, when I look at this, I'm like, this doesn't look like the bottom yet. If we go up to 85K, it's not a big deal because then it'll continue to go down from there. If we go up to 70K or 80K, it doesn't matter. If we go up to 90K, it doesn't matter because we're eventually coming back down for this bear market. And they're going to trick people into buying just so then they can use y'all as exit liquidity and dump. But anyways, on the weekly chart here, we have had that curve upwards here on the percent on trend exhaustion. So if both of these on the weekly chart continue upwards, that's super bullish. But what I was mentioning before is look at exactly what happened back here during the last bear market that we had in 2022, right? This happened multiple times, and every single time it happened, we had that pullback again. And then another extended sell-off, then it does it again, and then another sell-off, and then it finally takes off. So I think it's going to end up being like that. I don't think this thing's just going to be completely up like that. But if it does, that's what they call V-shaped recovery. And that would be good, I guess, for the bulls, but bad for the bears. So we're going to see if this is going to be like a V-shaped recovery. Personally, I think it's going to end up doing something similar to 2022. And I think it's going to end up continuing downwards from here. I think we're going to have a similar sell-off. And it looks like it's what's playing out. So we just got to see if that is real or if it's fake. See if it'll happen. See if it's not. Either way, I'm here for it. So let's see what happens. But yeah, this is pretty much all I got for you guys today. I just kind of wanted to cover this. And no, I'm not switching bullish yet. I'm not flipping bullish yet. I'm still bearish right now. Again, I'm still going to be bearish until we see 100K Bitcoin. If we don't see 100K and above, I'm bearish, right? So this is nothing to me. I think we're going to get a rejection. I think this is a bull trap. Literally, it's in the name, a bull trap. What is a bull trap? Well, if you look right here, we are inside of a bearish pattern, right? So first thing they could do here is trap the bears. So if we just broke out to the upside on a bear flag, boom, they just bear trapped people, right? And then as we're going up, we're breaking past the resistance and then we get rejected. Boom, they just bull trapped people. This is how exit liquidity works. They need people to dump on. They need more people to buy in, push the price out or push the price up so then they can sell at better prices. This is literally how they do it. So just let it keep going. People got bear trapped down here. Bears got trapped. We thought that was going to come down to the bottom of that bear flag immediately. Ended up not doing it. Boom, goes up, looks bullish. Let's see if it breaks past this. If not, boom, people got bull trapped. And it literally will keep repeating itself until it continues to go further downwards. So yeah. But anyways, this is all I got for you guys. Hit the like button, subscribe. Remember, I'm not a financial advisor, none is financial advice. Check out the link inside of the description for Avantisfy, best DeFi trading futures platform out there. If you want to check it out, it's a DeFi trading platform, and you can trade up to 500x leverage. So go ahead and check that out, and check out Chart Prime, best automated trading indicators out there. And I do use them personally. If you want to see, we can use the volume profile indicator, the momentum wave bands, and also we have this one right here. So as you can see, they have the premium prices which it is showing that Bitcoin is trading at a premium price. And then we have the equilibrium price point, and that is about 73 to 72K. And then we have what they call the discount price zone, which is about 65K Bitcoin. And we're right here in the red area of that momentum waistband, which is a pretty big resistance area. So let's see if it goes up to the top of that here on Chart Prime and then dumps from there. See what Chart Prime says about it. But yeah, according to Chart Prime, we are looking bearish. We are literally inside of a bearish zone. So we'll have to see. But yeah, this is all I got. As always, I'll be back with another video.